try and get to them as I go. Basically, I wanted to discuss the real estate market. I know I've been thinking about this for a while, and with the interest rates having gone up lately, and people are kind of feeling a little bit funky with the market and everything like that. They're not really sure where it's going to go. I just kind of wanted to sit back, see what was going to happen the last couple of weeks, and then kind of think on this a little bit more, and then give my kind of two thoughts. So I've got a little slow day today, so I wanted to jump into this and kind of discuss with you guys. I know I've had a lot of clients and then a lot of friends and stuff even ask me what's up with the market, what are we going to do? Is prices, what's going to happen? Is it going to crash? Things along those lines. So I just wanted to kind of touch on a couple topics real quick. And then if you got questions, feel free to shoot them my way. So basically, I'm going to kind of freeform this. I got a few notes for what I was going to go over because I tend to wander a little bit occasionally. But I want to talk about interest rates, which is the big one everybody's worried about. So I want to talk about that. And then I want to talk about prices, which is the other one everybody's always asking about. And then I would like to talk about just inventory, what's on the market, that kind of stuff. So first, interest rates. I know everybody knows, it's not hard to know that, watch the news. Everybody knows interest rates have essentially doubled since the beginning of the year, which sounds crazy and scary. But I bought my house 4 years ago. Interest rate that I had was 5%, and I have great credit, little debt, all that stuff. So it's not out of the ordinary to have this kind of interest rate. They actually went down a little bit last week, but let's not see that as a forecast for the future. The odds are they're going to keep going up this year. So right now, the difference between let's just I'm going to give you a little example here. So if you have a $300,000 house and your current interest rate is probably in the middle fives, maybe a little higher, compared to, let's just say, a 4% rate, which is kind of a little bit more normal. You're looking at like a $250 give or take difference on the payment monthly, which I know will price some people out. I understand that, but at the same time, let's just say that you can afford the extra 250. So the idea here is I do think that interest rates will go down in the future. Probably we're looking at maybe 18 to 24 months of like a higher, more volatile situation, and I think they're going to stabilize in the future. But let's just say it's 2 years at this 5.5, 6% rate, right? So let's just say it's 250 for easy math a month. That ends up for 2 years ends up costing you about $6,000. So the thing I wanted to point out in that regard, it kind of goes to my next topic of the sales prices, that they're forecasting, like realtor.com just did put something out, and then I think a bunch of the other experts are saying on average maybe like 8% for appreciation this year for homes. So if your house that's $300,000 appreciates at 8%, that's roughly $20,000 to $25,000 of appreciation. So let's say it does that, and then it doesn't appreciate all in year two. So it's gone up $25,000, but it costs you an extra $6,000 in interest for that higher rate. So you are still coming out ahead. So I've had people ask me, should I wait? Should I wait it out? But the idea here is that I'm kind of tying these two topics together, interest rates and the sales prices, because the forecast is that, yeah, they're still going to appreciate this year. I haven't seen much for what they're saying for next year. But if you sit on the sidelines and wait for the rates to go down, odds are you're going to lose out a lot of that appreciation. So, and remember that you're not stuck to that 30-year fixed rate for the rest of your life. You can refinance that. So in 18 months, whatever it is, it goes down a little bit. You refinance it, and you can start getting some of that money back, that 250 we talked about. So that's kind of like the one thing. I know the interest rates are scary, but I've had a lot of clients, like at least a half a dozen people in the last week or two, tell me that they're actually relieved. Like, oh my God, no, I don't have to worry about these crazy like bidding wars, all this stuff. Because that's the other thing, the other side of this. I always try to look for the positive, right? Yeah, it's kind of sucks. Rates are going up. You're going to spend more money, so there are people going to be priced out. But the other thing is, you're not going to spend $50,000 over asking price on these bidding wars, because you're not going up against 15, 20 offers. You're going up against maybe two or three. You're not going to waive your appraisal. You're not waiving inspection. It's not maybe going to be as is, things like that. So it's going to be less of a seller's market. It's going to be more favorable for you as a buyer. So with all that in mind, I know the interest rates, it was awesome. It sucks if you missed out on the 2 to 3% interest rates. I get it. But at the same time, it's not like doomsday. And I think these interest rates are actually going to cool the market down, which we've already seen, which in reality is probably good for everybody. Slow the prices down, because I think over the last 12 months, I think the average is like 15% in appreciation. So the fact that we're cutting that in half, just because I think a lot of that was due to like the crazy bidding wars, things like that. So I know the interest rates are scary. It's like, oh my God, what are they going to? And they're going to keep going up. Let's be honest. Until this inflation stuff gets kind of sorted out, we're going to have something to deal with. So, but anyways, like just kind of keep that in mind. I think that it's going to be okay. That if you buy now, I think properties are still going to continue to appreciate because there are just so many buyers that, yeah, we lost a ton of them because of the interest rates, but there are still multiple offers on properties. There's just a lot of people still looking for homes. So that kind of leads me to the inventory part, but I'll go back to that. So sales prices, I already kind of touched on. Like people are like, oh my God, is it going to be like 2007, 2008? And I think everybody kind of knows that that was, that was caused by, you know, poor lending practices, things like that. This is a totally different thing. This is not like people have equity in their homes. This is not going to be some sort of giant foreclosure rush. Um, Prices, I think I've read somewhere that they call a crash, like a market crash would be like a 10% dip in prices, and I just don't see any possible chance that that happens in the next 12 months because there are just too many buyers unless something catastrophic happens with just the economy as a whole. But right now, I do not see any chance that prices are going to dip 10%, and it's not going to even itself out. So you're not going to wait out the prices and the interest rates. You're probably going to end up waiting out the interest rate and see that the purchase price down the road is going to be a little bit more. So that's something to think about. I just don't think that the sales prices are going to crash along with these rising interest rates. I think that it will cool, and if it levels off, fine, that's great. But I don't see them going down. And even if they go down a hair, it's not going to be enough to where you're going to make up a huge difference on your monthly payment, in my opinion. So that's kind of one thing. But the beauty of this is, like I talked about before, there's less competition, less stress as a buyer. You're not standing in lines outside of houses anymore. You're not getting into bidding wars. You're not fighting with people at front doors to get into houses. Things like that, which is nice. It is a less stressful environment for everybody. It's just the competition to go crazy over asking price and waive appraisals, do all this crazy stuff is less likely to happen. I've had written offers that are still multiple, like in the last couple of weeks, there were still multiple offers, but there was maybe one or two offers as opposed to like 6, 7, 8, 9, freaking 15 of them. So that's nice. It's keeping that, and I think that will keep the prices from getting just exorbitant and out of control. So, kind of moving on to that inventory thing that I was talking about. Well, actually, I'm going to circle back because I wanted to talk about something on the interest rate side of things. Because people are like, oh, shoot, so I'll just wait it out. I'll wait till these interest rates suck. I'll just wait it out, right? But the other side of this that we're seeing is like rental prices are now going up, and there's like bidding wars on rentals, and it's getting kind of crazy there too. It's kind of the opposite of what was happening to the market right now. The rentals are going up, and 6 months ago it was the sales. So if you're looking to rent, you're going to end up probably paying more than you would have thought. And I have a friend who just had his rental price just went up like several $100s, like, and probably like 10-15% of his monthly rent went up, maybe even more, this year, and it wasn't expecting it. So that's the other side of this that I wanted to point out about. I don't want to get too deep into like the pros and cons of homeownership, but just like the fixed costs of a fixed rate mortgage. So you're not going to have to deal with that. Like next year, your mortgage is not going to be 15% higher because you have a fixed interest rate. So that's kind of the beauty of that as well. So touching on that, I don't know that I need to go too deeper into that, but just kind of one thing I want to touch on with the rental stuff, because it's if you decide, hey, I'm going to wait it out. Like if you're sitting at home with mom and dad and you're cruising and you're not paying rent, something like that, or you have a nice situation, you already own your home, maybe you wait it out a little bit, sure. But I wouldn't suggest necessarily saying, hey, I'm going to go rent a property for 12 months to try and beat these interest rates, because I think you're going to find yourself having lost out on that appreciation, which I just talked about was about 8%, and then potentially having similar or potentially higher interest rates over the next 12 months. So something to consider. We talked about the sales prices, and we're already about 10 minutes into this, and I'm already going, so I don't want to go super long on this, but I wanted to get into the inventory stuff. So I was reading an article, Realtor.com. They were saying that they were forecasting a little bit less for new homes to be on the market this year in 2022, but they're actually forecasting about 15% more homes to be listed over the next year, or like at the end of the year, give or take. But that was more than they were anticipating, and I think a lot of that goes to do with just overall demand as well. But they were saying in the article, don't expect this giant rush of homes to hit the market, because there is still a shortage in reality. I read an article a couple weeks ago. I don't remember what the numbers exactly were, but the amount of homes that we're actually like short on is pretty huge. So like a lot of houses would have to hit the market for like all of a sudden there to be like a house for everybody, and like all these bidding wars to just go away. But it is starting to show that there's going to be some more homes coming on the market. There again, less competition, less stress. Buyers are going to have a little bit easier time finding a property. So this actually might be a nice time to be buying coming into the fall and later into the winter, just because I feel like the competition will be going down and there's going to be more houses, because people still always going to need to sell their house. And so for the sellers that haven't sold yet, like, oh no, I kind of missed the boat. I wouldn't worry too much about that. People are still looking. There are still tons of buyers, but just be a little bit more realistic about your price. Don't go crazy on the pricing. Make sure you're confident that your sales comps are there and that you're not trying to add on top of that, because realistically speaking, I think from like the last month or 2 months or 3 months of sales, you're probably leveling off a little bit more as opposed to going up with the market. So, but yes, that article is interesting, and I'll try and post it here too, so for more context. But yeah, 15% more homes on the market, so inventory is going up. And the buyer pool is probably going down a little bit. So less of a seller's market. It's probably still pretty fair to say it's a seller's market, just due to the amount of people that are buying. But less of a seller's market where you're not going to just get just railroaded at every turn making crazy offers. So that's one nice thing. So yeah, that's the one thing I want to drive home: less competition. I've already seen it with my buyers. It's like a different world out there now than we were looking in the early spring. So it's kind of nice that we've kind of seen that kind of change a little bit, and it is. And interest rates suck. I get it. I get it. I'm not stoked either. Like, it kind of pigeonholes me. Like, I'm in the same boat. I would, if I ever wanted to move and sell, like, I would have to take on a huge interest rate too, compared to what I have now, because I refinanced in the last, when it went down. So I'm under 3% right now. So like, kind of makes me think I'll just hold out and wait off. Like I was saying before, if you have the ability, then maybe you can wait and see how the market turns out. But if you're still in the market, you're looking for your first home, or so you need more space, like, that's always going to be the case. Somebody's always going to outgrow their home. Somebody's always going to be buying their first home, things like that. So if you're in that market, and I just don't think there's anything as much to be too worried about. Again, it stinks, but I think it's something that you can overcome, and over the next 24 months. And especially, I was reading another article, made a good point, like, when the election cycles turn, things change economically, and in 24 months there'll be like another election. And realistically speaking, I don't think the interest rates. I think historically at election times, and don't quote me on this, I'm not an economist, but the article I was reading was suggesting that historically interest rates have gone down near election cycles. So that would be right around the 24-month period, 18 to 24 months, and that's kind of where I'm getting that from when I say that stuff. Again, it's not factual. It's not me guaranteeing it. It's just something that I feel, and based off the research I've done, which is pretty extensive. I'm not just flying from the hip on that kind of stuff. I wouldn't come out here and talk about that if I wasn't a little confident in it. So that's something to think about. Like, if you were locking in a rate at this point in time, yes, it's not going to be what it would have been like 6 months ago. But hey, I'm looking for an investment property, and I'm in the same boat, because now I'm like, crap, I can't get that great rate. And like, so I'm looking at like the returns are going down, and I'm like, should I even do it? But I'm still looking, because I do feel like there's still value to be had out there. Because I do think prices are probably going to continue to rise, and then if I wait it out, I think I might kind of miss a little bit of that appreciation, which is something I would kind of hate to do. So overall, those are kind of things: interest rates, sales prices, and inventory I wanted to touch on, because I think they're important, and I think it's something that people are kind of worried about, and I've had people ask me about. So I just wanted to kind of address it and bring it to everybody's attention. So if you got any questions, you know where to find me. Shoot me a text, shoot me a message on Facebook, Instagram, whatever. Shoot me an email. I'd be happy to help you out if you got any questions along the way or anything like that. So until then, awesome. I appreciate you guys checking me out and listen to what I have to say. So hopefully everybody's doing well, and hopefully if anybody has any questions, reach out. All right. See you guys.